I'm bullish on this pair overall, right? At some point, can we get a retracement? What is the deal, good people? Coming back to today, want to do a markup on the Euro JPY. Made a post, a short last night about an 80-20 scenario. Want to take a look at this pair and talk to you about what I saw and what I currently see. We'll do a multi-time frame analysis, get down to the 1 hour time frame, see what's there, and we'll talk about some fundamental pieces that also play into this pair. So let's go ahead and dive in. As always, right, we start out on the monthly time frame. We mark out extreme highs and our extreme lows, like so, just to get a frame of the market, put it into the frame, and give us that picture of the range. Then we dive into our support and resistance. Bang, right? So we're dropping our support and resistance on the monthly time frame. And I'll talk you through. So let's talk about fundamentals. You have two camps, right? One camp says fundamentals is what moves the market. Then you have another camp that says technicals are the holy grail of everything. And to be quite honest with you, both of them play a role, I believe, we believe in the market, right? You have key levels that tell you historically what's happened, right? Key levels being support and resistance as we're marking out here. And those levels are ultimately give you an indication of pattern, right? Where someone made an action in the past. And you see these patterns repeated over and over and over again at key levels, but then also within the Fibonacci sequence, you see the patterns play out over and over and over again. And ultimately what the market is just documentation of people's patterns, right? So as we're marking out the time frames here, both of them, fundamentals and technicals, play a part in how the market moves. And with us at the Forex Trade Room, we teach you both. We talk about fundamentals. We have a newsletter called The Swing that my awesome partner Benny Allen puts together every week, breaking down the fundamentals of each currency pair, each country, and what's happening fundamentally that could ultimately drive the market in one direction or the other, so that we as a group with the inner circle have an understanding of where the market is from a fundamental perspective. So as we go in to do our technical analysis, we have a fundamental bias on the market, right? So when we're looking at any given pair, we know that, hey, fundamentally, this is what's happening, and this could ultimately drive the market, or this is why that technical level got broken, right? So over the weekend, we do our weekly ritual, and we break down each pair, and we go through and we break down where they are and what we're looking for the week ahead. We also talk about fundamentals and what's happening fundamentally that could be driving, or that will drive or can drive that particular pair to that ideal or that specific destination. With this pair here, specifically with the euro yen, you have a hawkish ECB. You have inflation in the eurozone continuing to rise. And you also have concerns from investors about rising interest rates for all of your major central banks around the world, right? So with that, you have a European central bank that is looking to continue to increase interest rates to continue to fight inflation, right? To bring inflation back down to their 2% target. And when you have interest rates rising, right? Interest rates rising is good for the currency. Okay. Interest rates falling or being decreased is not good for the currency. So you'll see with the ECB continuing to have a hawkish narrative, meaning that they're looking to increase interest rates, move the interest rates higher, you'll see the euro pairs moving to the upside, right? But what also you have is you had a new governor of the Bank of Japan elected, and that governor stated that there's no rush. There's no rush in changing the monetary policy stance for the Bank of Japan. Now, the Bank of Japan, they are extremely lenient. I'll use that word, or dovish. All right, we can use that word as well. So they are continuing to print money, right? And their stance is ultimately they're going to allow the free market to determine what happens, right? So they don't increase interest rates regularly at all. Currently, they actually have a negative interest rate, right? Negative 10 basis points. And that ultimately puts the yen in a position to where a lot of currencies that are increasing their interest rates, those currencies will ultimately be stronger, right? And you'll hear people say, "Oh, the currencies are running on the yen," right? Which means those you don't get many pullbacks in those crosses because the yen is ultimately so weak and the Bank of Japan is dovish, right? So that's ultimately what's happening here. And so on the daily time frame, right, we did our support and resistance. We took those all the way down to our lower time frames. And then we dropped the fib on the chart here, right? And we see that from a daily time frame perspective on this euro yen, we have a 618 retracement level, right? So when we're looking at the Fibonacci sequence, and you're looking at your fib levels, right? Your 618 retracement level ultimately has a matching B extension, right? The levels in between the AB boundary are your retracement levels. The levels above your B boundary are your extension levels, right? So as you get price to retrace, we look at these retracement levels as energy trampolines, right? And the deeper the retracement, the more momentum price will have to extend to its destination, right? So we use the Fibonacci sequence to give us high probability entry points, but we also use it to give us high probability take profit levels as well, right? So here we have a 618 retracement level, right? And Smart Trader created this smart fib, right, to map out the Fibonacci sequence as price is moving. And what they did was they color coded the fib levels. So therefore you can look at this and see that the retracement levels have a matching extension. So these red retracement levels have a matching extension of a 1618. Then you have your 786 retracement level, meaning the market took back 78.6% of the original move to the upside, right, of that AB boundary. That 786 retracement level has a matching D extension of a 1.27 extension, okay, 127%. Then you have an 86% retracement level, meaning the market took back 86% of that original move. That 86% retracement level has a matching D extension of the 1.18, right, 118% of that move. Right. So looking at this here on this euro yen, we have a 61.8% retracement level. The market took back 61.8% of this original AB boundary move. Right. So the matching D extension on that over time, long term, is the 1.618, which is at 158, 122. So overall, the price is moving in that direction. Right. So we'll keep that in mind as we continue moving down in the time frame. So that's our daily markup, right? Support and resistance. We got our fib sequence, and we're looking at that fib sequence playing out over the long term, getting to 158, 122, unless something drastic changes with the narrative of the ECB or the narrative of the Bank of Japan. All right. So let's drop down to the 4-hour time frame and look at it from a 4-hour perspective. We'll zoom out so we get the view of everything, right? We'll come back to our lowest point and we'll run our fib off of our low, which is here, right? And I had a question, one of the last videos, how do you know what direction to run your fib? And you want to map your fibs out in the direction of your overall bias, right? And we just talked about the ECB being hawkish, increasing interest rates. So we're looking at this pair, the overall bias being long, right? Or bullish. So we run our fibs to the upside in this scenario, okay? Until they get taken out, and then we'll go from there. But here on the 4 hour, you see we had a 38.2% retracement. The market took back 38.2% of the original AB move. So the matching the extension is the 1.618 extension at 149.124, right? Which is in line with our bias off the daily time frame as well. That's what we're looking at overall moves. Now, again, with the Forex trade, when we teach that the market moves in waves, and you can see here on this chart that the market moves in waves, right? So we look for retracements and extensions, right? But the market moves in waves, right? Market moves in waves. So here on the 4 hour, price is pushing to the upside, and looks like price is moving to that 146.711 level, right? That weekly resistance level that we have here. All right. So that's where we are from a Fibonacci perspective and a support resistance perspective. Again, I don't do support and resistance below the daily time frame, just because these levels are a lot stronger than other levels. So I keep my support and resistance there. So let's go down to the 1 hour time frame, and we'll take a look at things here from a Fibonacci perspective. And I'll show you what I was looking at last night regarding the setup that I had on that I did a short on. Right. So we come back to that low, right? We said we want to run the fibs in the direction of our bias. So we find the lowest point and we map them out. Now we see that this fib, this AB boundary, got taken out to the downside. And this is a way that you can also do back testing to test your methodology or your strategy, right? And I did a previous video where I talked about Benny and I doing back testing for the year of 2021. And this is how we did it, right? And we looked at price moving and the waves moving. But when that A gets taken out, right, price pushed up and then came down and took out that A. When the A gets taken out, all you do is change the direction that you're running your fib, right? So here we run the fib now to the downside, right? And this is how you map the fibs out all the way through a chart to get to where price currently is. So price came down, took out the A, we flipped the fib, right? Then price reversed, pushed to the upside. So we changed the direction of the fib again, right? And we do this all the way through until we get to the point where price currently is, okay? This is a long form for me to show you how we go through this process, but this is how it goes, right? All the way through until we get to current price, right? And this is how you can also determine what direction to run your fib in, okay? Because if that fib gets taken out, you just change the direction, all right? So we map the fibs out all the way through, okay? So here we are on the 1 hour time frame. We have this, all right? This is our active fib, our capital fib, right, on the 1 hour chart. And we see prices pushing to the upside, okay? Prices pushing to the upside. We're coming into a 78.6% retracement, all right? So we're getting deeper into this active AB boundary zone, okay? So this is one way for us to look at where price currently is, right? From an AB boundary perspective. This is the active fib, right? So the other perspective we can take is we can look at the last impulsive move to the upside. Now, this is what we call our sub fibs, or our smaller waves within the primary sequence, right? So when you see me do this, running fibs in the opposite direction of the capital fib, know that these are a sub fib. So these are just smaller waves within the original sequence, right? To see if we have any confirmation or confluence of price moving in one direction or potentially reversing. Okay. Now, so this is just me running the sub fibs in the opposite direction. Okay. We start at the low. That one got taken out. So we ran it here. So what you saw me post last night was this right here. Okay. And this is a sub fib or smaller wave within the original sequence. But you had your shallow retracement less than a 38.2% retracement. Price pushed into the 118, 127 zone, right? Zone that we like to see price push into and stall, right? Give us some consolidation. And we got that, right? And then I was looking for a price to retrace to get back to at least our TP1 of that 38.2. Okay. Now, that was my post. That's what my idea was, because I was looking for a low price to be able to get long on this euro yen, right? Because our bias overall is to the upside. Okay. So what you had is price came down. It only got to that 23.6% retracement level. And then price took off to the upside. All right. So the question then is, why did that occur? Why did that occur? So, right, last night price was in this zone. Okay. Price was in this zone hovering in that 236, in that 118. Price was in that 118, 127 zone, and I was looking for the retracement to happen. Like so. Okay. It didn't occur. It didn't happen. Right. I had my stop loss placed at my D extension. Overnight, what occurred is the year-over-year CPI for the Japanese yen. All right. That data was released at 12:02 a.m. Eastern Standard Time. And that data came out positive for the euro. It came in right in line with the expectation. And with that CPI data coming in right in line with the expectation, what that does was that confirms the new governor of the Bank of Japan. It confirms their stance on not changing the monetary policy for the yen, right? Not being in a rush to change the monetary policy. So with that, right, the yen weakened, right? The yen weakened, and you see price just rose to the upside. Okay. So that's what occurred here. There was a fundamental catalyst that pushed price against the yen, which is why this play did not play out, right? This move did not play out, right? So now we're looking at a fresh AB boundary. We have our 118, 127 zone here and our weekly resistance level at 146,711. All right. So what I'll say is I'm bullish on this pair overall, right? At some point, can we get a retracement? Maybe. But with the hawkishness of the ECB, European Central Bank, and the dovishness of the Bank of Japan, I'm looking for this to continue to rise. And we may not get an 80-20 to play out on this pair. Okay. What we'll do is we'll watch when price gets to this weekly level to see if we're able to get a retracement at that point, or to see if the narrative changes at that point, right? But if the narrative stays the same, you can look at potentially not getting much of a retracement and price continuing to head to the D extension, right? So with the yen crosses, with any of the yen crosses, play them with a bit of caution and add an additional point of confirmation on your trade, because we could see price run against the yen, right? We could see price move against the yen across the board because of the dovish nature of the Bank of Japan and the hawkish nature of the majority of the central banks around the world outside of Japan. All right. So that's my outlook on the euro yen. We're bullish We didn't get this move to play out as we anticipated last night. Now we're looking for price to continue moving to the upside. We'll take a look when we get to this weekly resistance level at 146,711. And if we get our additional confirmation, which for me, I use the Ichimoku cloud, right? If we get additional confirmation with a cloud break, then I'll look to potentially take a short. It'll be a short-term short though, just for the retracement to then get a low price to get back long on this euro yen. So if you like the videos, if you have questions, post them in the comments, like, subscribe to the channel. We love to hear you guys' feedback. We love to hear what areas you need assistance in most, right? If you want to join us in the inner circle, well, we do live sessions Tuesday, Wednesday, Thursday. We also do a mindset session just for our inner circle members on Monday mornings to get your week started off in the right way. And we do a Saturday session where we go over all of the hot setups for the upcoming week to prepare ourselves so that we're not searching for an entry as the week arises. We do that on Saturday morning at 7 a.m. Eastern Standard Time. So if you want to join us, click the link in the description. We'd love to have you be a part of the family. We also do some additional trainings when it comes to the Ichimoku cloud, different entry techniques, and how you can really implement the Fibonacci sequence, the 80-20 scenario into your trading and develop a strong trading plan that you can be consistent with to ultimately make progress toward becoming a consistently profitable trader. So have an awesome day. We'll be back to you soon with another video.